All right, time for something more layback, I guess. This week's been a long episode, but it's time for the regular portfolio segment. It's been quite the busy week, actually, when I'm thinking about it. And I had a lot of guests, and we went to winter time or whatever that's called here in Europe. So I missed a few appointments, but I still got to speak to Mark, who is a freelance journalist living in Argentina, and his portfolio is interesting. So he talked to me about the way that he invests money. Just remember, Mark is not any sort of expert, okay? He's just a regular guy, hence the name Regular Portfolios, who's willing to share his portfolio with me for some reason. And if you want to do that as well and sit down for an interview with me, I would talk to absolutely anybody and everybody. Just shoot me an email at antonio@researchtalks.com and we'll most definitely make it happen. All right, let's find out what freelancers, aka chronically unemployed people in Argentina, invest in. All right, Mark, you just told me off mic that you recently moved to Argentina. What did you have to do? Did you have to do that, or why did you do it? And what do you do for a living? Who are you? Tell me all about it.
Okay, well, thank you, Antonio, for having me on your show. Big fan, long time listener, first time caller, as they like to say. Yeah, I'm a
You made me feel
freelance.
like Dave Ramsey for a second. Just a little bit
Yeah,
less rich.
yeah. So I'm a freelance writer and journalist. I have been since I graduated from university in 2013. And I've written articles for UK newspapers like The Guardian, The Spectator, The Daily Mail, and I also write occasionally for The Motley Fool. So yeah, that's what I do. I also have a side hustle teaching English to doctors from all around the world who need English certification in order to emigrate to English speaking countries like the UK or the US. And I moved to Argentina just 3 months ago, and it wasn't necessary, really, just because I wanted to. And I have the freedom to work from wherever I want to.
Nice, nice. So how's Argentina these days?
Um, well, the experience with inflation is something that everybody talks about. I think their inflation rate is approaching like 70 or 80%.
I thought it was 100%. I read it was 99% because I interviewed one uranium company from there, and it was a little bit shaky on the details, but I thought it was like 99%. But yeah, it's really high.
Well, yeah, it could be, yeah. But it's just quite shocking when you take out money. For example, I have to withdraw cash every time I need to top up because this is a long story, but because of the capital controls that the government imposes, there are multiple exchange rates. So there's an exchange rate between the Argentinian peso and the dollar for tourists. There's a different one for locals. There are various different exchange rates. And if I pay with my card, I pay a very uncompetitive exchange rate. So for that reason, I always withdraw in cash. And I take out maybe $500 at a time. And the massive wads of Argentinian pesos that you get, shoving them in your pockets, it's quite impacting. The experience really makes you see what inflation looks like in terms of how it renders notes that used to be very valuable almost worthless.
Do people own physical precious metals there? Like, is that a thing because of inflation and their history with inflation?
Well, the people I speak to always talk about saving in US dollars, although the government imposes a limit on the number of US dollars that Argentinians can buy per month. I think it's $500 a month that they're allowed to buy. So people who want to save will use that allowance in order to accumulate dollars.
When somebody complains to me about their government, I'm just gonna refer them to Argentina.
Yeah,
Say, if you
absolutely.
think this government's bad, go to Argentina.
Yeah.
What does a journalist invest in, Mark? What is your portfolio breakdown look like?
Um, I have core positions in ETFs, but of course, like you, and I imagine many of your listeners, I can't resist stock picking, um, despite the well-known statistics about the underperformance of that investing style compared to investing in tracker index funds. And I also find myself attracted to sort of going down rabbit holes, reading about sometimes difficult to pronounce elements from the periodic table, their global supply and demand, and the stocks I could buy in order to get exposure to them and their price movements. And that's pretty much how I came across you and your splendid channel here, Antonia. And everyone should remember to like and subscribe, of course.
So you if you had to put it into percentages, your broad market holdings, is that the thing that your portfolio is focused on?
I couldn't give you an exact proportion, to be honest, but I would say the majority of it is in ETFs, be be those global index trackers or sector specific ETFs. But
Mm.
I am invested in commodity plays as well. Those being platinum, uranium, copper, and tellurium, and that would probably make up about 20% in total. Those investments, which I
Okay.
imagine are of most interest to your commodity focused listeners.
They are. Yeah. And well, 20%, that's not a lot. It's 100% for me. There's just an interesting metal there that I'm assuming is metal. I don't even know what it is that you just mentioned. But what's the breakdown then within the commodity part of your portfolio? Like what is your weighting between platinum, copper, tellurium, and uranium?
Yeah, it's about equal. So it'd be about 10% of the total in this copper and tellurium play, about another 10% in platinum, and then another 10% in uranium.
Okay, so copper, tellurium, that's one play that you're invested in.
Yeah, exactly. I can go into that a little bit if you're
Please
interested.
do.
Yeah, okay. So tellurium is an element in the periodic table. It's described as brittle, mildly toxic, very rare, and it's a silver white metalloid.
Kind of
And
like my wife.
interestingly, if you look at a price chart of tellurium, you see that from the year 2000 to 2011, it ran up from around 10 US dollars per kilogram to a peak of $250. And so that's about 2,400% increase from the year 2000 to the year 2011. And then from there, just precipitously dropped off a cliff. And that's because tellurium, an oxide of tellurium, is used in rewritable CDs and DVDs. And of course, we all know what's happened to CDs and DVDs. I think the last time I saw a CD was hanging in someone's garden because the shine of a CD scares away birds, doesn't it? So nowadays not much demand for that. However, tellurium is still used in metallurgy. It's mixed to make pliable alloys. It's mixed with iron, with copper, lead, stainless steels, and most interestingly, it's used in photovoltaic cells and solar panels. So there is a source of demand which is clearly growing with the green energy revolution. And on the supply side, China is by far the largest producer of refined tellurium. They make about 50% of annual production. So, given the fact that there's growing demand from solar panels and the fact that we've seen that the market is able to be massively disturbed in the past with CD and DVD demand, we saw like a 2,000% run up in its price in about 10 years. And the fact that on the supply side, there's that geopolitical instability with China and the tensions with Taiwan. To me, that seemed like an interesting commodity play to get into.
Hmm. How do you, is there, I don't imagine there's primarily tellurium miners or something like that.
No, you're right. It turns out a pure play is almost impossible to find. So tellurium occurs in trace amounts in copper, and it can be recovered from copper anode sludge after electrolysis is complete. So for that reason, my tellurium play is a German company called Aurubis, and they're Europe's biggest copper smelter and recycler. Massive company. They have a market cap of around 3 billion euros. And really, it's a copper play because their performance depends on the price of copper. But it's not a bad copper play in my view, or Rubis, because interestingly, it's cheaper to recycle old copper than it is to mine and extract new copper ore. And recycled copper sells for around 90% of what new copper goes for. So it retains a lot of its value despite having been used before. And as well, because Aurubis is a German company, you're getting copper exposure without any of the geopolitical risks that come with investing in a miner in a developing country like Chile, for example.
Hmm. Hmm. And the other place that you have, they have on your portfolio, what is actually you have a few of them, right? So platinum, copper, tellurium, and I even have a hard time pronouncing it, and uranium. If you only had to keep one of those metals for say the next 1 to 3 years, which one would you keep?
Possibly platinum. Um, I think platinum's quite interesting. Um, just for listeners who haven't really looked into it before, so the platinum price is currently around 925 US dollars per ounce, whereas gold trades for about $1,600 an ounce, and palladium is about $1,800. So historically, it's quite strange for platinum to be trading below gold and palladium. That's something that happened from about 2012. That the platinum price started falling, and by about 2015, it went below gold, where it stayed ever since. But there's a striking statistic that all of the platinum ever produced, sort of above ground supplies of platinum, would fill an Olympic-sized swimming pool only up to your ankles, whereas all of the above ground supply of gold would fill an Olympic-sized swimming pool 3 times over. So that gives you sort of quite a visual idea of how much rarer platinum is in comparison with gold. And on the supply side, 12% of global platinum comes from Russia, and 72% comes from South Africa. Of course, South Africa is not an incredibly stable jurisdiction. They've got lots of industrial action, underinvestment, and rolling power cuts. I think they even have something called load shedding, whereby they just cut off the power, don't they, periodically to certain parts of the country in order to reduce the strain. So it's not a very stable jurisdiction, and the vast majority of platinum comes from there. But interestingly, on the demand side, platinum's used in autocatalysis. It's used in medicine to make pacemakers, cochlear implants. It's used in cancer drugs. It's in jewelry, for investment. It's used in hard disk for laptops, for cloud storage. And again, just like with tellurium, there's sort of a green energy angle because it's also used as a catalyst in hydrogen fuel cells. And there's another statistic from the World Platinum Investment Council, and they say that the current EU and China green hydrogen generation capacity targets alone would require cumulatively between 300 to 600 kiloounces of platinum by 2030. To put that into perspective, is actually not a lot. Um, so, so the platinum market was actually in surplus relative to demand in 2022, and the surplus relative to demand was roughly around 600 kiloounces. So, so really, maybe this growing demand for platinum for use in hydrogen fuel cells could tip the market into deficit, but I don't want to overstate that particularly. But in general, I see it as a metal. It's incredibly rare. Supply is threatened by geopolitical instability, and it's used in a very diverse range of uses. So my investment in it is just through a physical platinum fund. I don't invest in miners.
There's not really a pure play platinum company either. I guess there was one. What happened? Something happened to it. I don't even remember. Just because they're not as stable, and it's almost never platinum alone. You would also have the palladium element into it, but palladium is not as cheap as platinum is. So some of these stocks would get valued based on the palladium, and that makes the stocks already quite high. So you don't really see that. You don't see that discount that the platinum is worth now. So,
of course, and that's part of the speculative play, that you're hoping that possibly car manufacturers might substitute from using palladium, which is about twice as expensive as platinum, towards using platinum in catalytic converters. But if you're invested in something that is exposed to both palladium and platinum, then one going up at the expense of the other is sort of just nets neutral, isn't it?
Yep.
So, but that's why I invest in. It's called Wisdom Tree Physical Platinum Fund, and it's just a physical holding. There's a Sprott one as well, I think, but that's platinum and palladium, so I wasn't interested in that.
Same thing as you mentioned before. Yeah, it's true, and they often balance each other out.
Yeah.
Okay, interesting stuff, Mark. What if we were sort of to close it here with the gun to your head scenario question? And you don't have to feel pressured, because this is called Resource Talks. You don't have to feel pressured into telling me something about resources. But what if there was a gun to your head right now? You had to sell everything that you have, including your broad market holdings, and you only buy 3 stocks. No ETFs, because that's kind of cheating, because you're buying more stocks, right? Which 3 stocks would you buy, and why?
Well, difficult question. I'd probably go with Google and Rio Tinto for the commodity exposure, very broad range of commodities, and maybe Microsoft as well. Really, those are just, for me, fairly conservative choices. But on the resource side of things, I'd be happy to hold maybe Yellow Cake or Sprott Physical Uranium Trust, because I think I'm sold on the thesis, as we cultishly like to say, that the price must go up or the lights will go out, as a man named Mr. Rick Rule once said on this very program.